The Euro-New Zealand dollar currency pair has been in a downward price channel since late March, but the move down is looking kind of weak and it's time to watch for a bullish turn. I'll show you all about it. Hi, this is Tim from TradingStrategyGuides.com. Today's trade pick is a bull flag on the Euro-New Zealand dollar currency pair. We'll have a look at that shortly. First, we got a few active trades to look at. Later on, today's trading maxim. And we've arrived at another Friday, gang. Remember to click the subscribe button and hit that bell so you don't miss any of these great trade setups. Let's take a look at the active trades. Tesla is hanging on up here around 1400, and that's good. We're moving our stop up with the PSAR. As of right now, Thursday, right after close, PSAR is sitting at 107.939, and we've got the stop there locking in 181.29 on this. We're about 4.5 times our original target amount. I hope you guys are on this ride with me. This one's going to be a big one. Well, on Monday, Litecoin popped right up here, hit our break-even stop on our second half. So we have a bit of profit on this one, and now I'm done with it. I mentioned that we had insufficient volume to take this gold trade when it actually broke out of this range. I've been watching it, and it's just going on without us. So I'm going to set this one aside, and we'll see what we can do with it at some later date. So I'm done with gold for now. The E-mini Russell 2000 index set up from a week ago Monday triggered a sell signal right here on Thursday. I got in this just before the market closed a few minutes ago. It's got slightly less than average volume. I think it was a little over 95%, 96%. So I'm in this half size at 1394.40, stop loss of 1471.80, and first target of 1342.80. And Monday's silver setup triggered a nice full-size buy right here on Wednesday. I'm in this at 1872.02, stop loss of 1806.46, and first target of 1915.61. Thursday it went 3/4 of the way up to our target, but then it retraced and closed bearish. So I hope that's not a bad sign. And that's it for the active trades. Let's take a look at today's pick. Today we're looking at a bull flag on the Euro New Zealand that dates back to late March, right in here. This, of course, is a daily chart of the Euro New Zealand dollar Forex currency pair, and it's showing a really nice looking bull flag. A bull flag consists of an incoming uptrend like this one here, and then a descending parallel price channel like this. A bull flag is a bullish consolidation, so I will only take a buy trigger on this. And the pattern is confirmed by a decline in volume and volatility down here. I measure the volatility using the average true range, or ATR, which shows the average length of the last 14 candles. And here's the trade plan. We will buy a daily candle close above the bull flag. On the breaking candle, to enter a full-size position, we want to see the volume bar reach up here to the volume average. If it doesn't quite reach the average but does reach 75% of the average volume, I'll open a half-size position to reduce risk. You can calculate the percentage by taking this volume number, dividing it by this volume average, and you should get at least 0.75. If you don't get at least 0.75, I suggest you stand aside on the trade. The stop loss will be 1.5 times the ATR, and your first target will be 1 times the ATR. So that means on the day that this breaks, let's say it closes right up here somewhere, just ahead of the close, you want to put in your buy order, and on that day you'll look at the ATR down here, you'll multiply this by 1.5, and you'll measure that distance behind the entry. For your stop loss, you'll measure 1 ATR ahead of your entry for your first target. If after entering the trade you get a candle that closes back inside the bull flag, we'll take a loss right then and not wait for it to hit the stop loss. Our intention is that a breakout of the flag should be explosive and hit our target fairly quickly. If the momentum goes away, we want to shut the trade down without taking a full stop if possible. When the price hits our first target, we will close half the position for profit and set the stop loss to break even on the remainder. We will then follow stops as price moves in our direction until the market takes us out. Typically, I do this using two positions. The first position has a stop loss and a take profit. That position will close automatically when the first target is hit. The second position will only have a stop loss, and that's the position that will be allowed to run. When the first target is hit, we'll have to manually move our stop loss to break even on the second position. I will only risk about 2% of my account on each trade, and that's today's setup on the Euro-New Zealand dollar. Remember, my intent here is to tell you how I manage these trades. If you've already got a good trade management plan, use it. Things that work for me may not work for you. You have to understand your own mind to find the best strategies for your trading. And speaking of understanding your own mind, that's my intent for the trading maxims. The maxims help me control my emotional impulses and keep me on the straight and narrow path. A maxim is a general truth, fundamental principle, rule of conduct, or a proverbial saying. The purpose of my maxims is to motivate me to discipline in trading as well as other areas of my life. I suggest you start your own list of maxims. Things that you can say to yourself while you're trading or doing life to make sure you always do the right thing. Feel free to borrow from my list. And today we're going to go back a little ways in the archive for our maxim of the day. Tim's trading maxim number 50. It is impossible to live without failing at something unless you've lived so cautiously that you might as well not have lived at all. And this is a quote from J.K. Rowling. For those of you living under a rock, J.K. Rowling is the author of the wildly successful Harry Potter books, as well as several others. In fact, one of my particular favorites is a sci-fi she wrote called The Host. Yeah, I'm pretty much of a sci-fi geek. What can I say? In any case, we should expect to fail at things once in a while. But it's really only a failure if you don't pick yourself up and try it again. The real failure is giving up. I've said this a few times here. I quit trading many times during the course of my learning curve, but I always came back, and I'm glad I did. I prefer to fall down a few times and continue to live. That's why I insist on doing CrossFit in my autumn years. Don't ever give up. And remember our Euro-New Zealand trade plan for today. We're going to buy a daily candle close above the bull flag. If the volume is not quite average, go half size as long as it's at least 75% of the average. Your stop loss is 1.5 times the ATR, and your first target is 1 times the ATR. And remember to click the link below to the trade management video for more details. And don't forget to sign up for my free Trading Picks email list to be sure you don't miss any of these great picks. I send out about 2 or 3 trading picks a week from all different markets, and you'll get to see them first. Best thing is, they're free. I'll put the link below this video. Be sure to come back to Trading Strategy Guide's YouTube channel every week on Monday, Wednesday, and Friday at 3 p.m. U.S. Eastern Time for my new videos. Don't hesitate to ask any questions you may have. I'll either answer your question right in the comments or in a training video or both. And remember, the only stupid question is the unasked one. Don't miss the next installment of the Trading Education series next Wednesday, when I'll talk about the TradingView trading platform. As always, thanks for watching, thanks for subscribing. Don't forget to hit the thumbs up below. Have a relaxing weekend, and I'll see you on Monday.